Well, if it'll go live now, it went live. What's up, Joe?
Are we still in the countdown?
No, we're not in the countdown. I didn't do the count. Here, you want me to do the countdown?
No, we don't want to lose our any of our viewers at the moment.
Our viewers all come later, man. I think
I know.
like 99% of the viewers we have watch on YouTube later or on the podcast feed. Because I think we get, well, on Twitter, I see like on the live view by like 2 or 3 in the afternoon, 50 or 60 people have watched it. But the significantly greater numbers come in through the podcast and through, I mean, YouTube not as much, but the podcast definitely. Although lately I've been getting a lot more attention on LinkedIn on the shows, more interaction, not a ton, but I think most people are listening to it in the car, or they can watch it on Spotify. The video version goes up on that podcast feed. So anyway, who knows?
I'm sure that's what everybody's waiting for.
Mm-hmm.
The video broadcast.
There you go.
That's
so let's see here.
So what do you got for us today?
I got this dismal news.
I didn't really see much out there either.
Bitcoin closes 8th successive bearish weekly candle for the first time in history. 8 weeks of the red.
I saw another one just this morning saying Bitcoin has first weekly green candle in 8 weeks, but then something about, I saw somebody talking about a week in one of my chats. I just think what I was just getting at is, I think when markets crabbing sideways and, sitting there like this, everybody's waiting for something to happen. I mean, people don't have anything to write about.
Yeah. Now we're green on the day so far for the week. Oh, wait, I have to actually, oh no, I'm on a weekly. But that would be 1, 2, 3, 4, 5, 6, 7, 8 red candles.
All right, let me see if I can find if it was in this channel real quick. Give it a lucky.
8 red candles. So I don't know where they're getting at now.
Oh, after 8. Okay, this one says after 8 weeks of downside, we get our first green week.
Oh, they're saying that it'll be green this week. Maybe. Because everything's up this morning a bit.
Yeah, this came out at... Yeah, this is this morning at 5:33. So...
Yeah, there was a little surge last night, I think, after this close. Yeah. So I guess that's what people are going by. I mean, we're kind of at that line still. Be nice to have a nice little bounce here. We're closing in on June. So we'll see what happens. But, we had eight reds in a row for the first time ever.
Hey, go back to that chart for a second.
Yep.
That's like at a pretty important little place there on the chart.
Absolutely. Sure looks like it. Got a nice support here. Who knows how long that'll hold, but I will tell you that in the material indicators discussions, everyone is expecting to have a real capitulation. Not they think we're not even there yet. So I don't know that. Who knows? I mean, the economic indicators keep getting, kind of ugly. I mean, there are good things. Jobs are up and other components of the economics are up. There's a lot of people saying that the Fed, that, inflation is slowing. I've seen a number of charts saying that. But then the downside to that is, what happens next? Do incomes, salaries stay where they are, or do they start dropping? Who knows? I mean, it's just, I don't know. Predicting economics seems to be a dangerous game.
Yeah. I mean, it's where all the money is, right?
Yeah.
So, I mean, it's like, that's where everybody's got their 2 cents to weigh in on these. I mean, to me, I saw a stat, or I was reading something over the weekend, and it was that, something about like S&P 500 being off 20% since January. And I was like, that was a pretty painless 20%.
Yeah.
It didn't really seem like it was, I guess because it was easier or gradual.
Yeah.
So, maybe more of that.
Yeah. I mean,
how
you know,
much
things
more?
like Amazon's closing warehouses, going to lay off people. They announced that. You know, I mean, I don't know.
That stimmy money running out, man.
Well, that's it, right? Like there's no more stimulant for investing, so people are either they took their losses and they're not going to come back into this game until they have some savings back to be able to do it, and people are reducing their spends. You know, they're looking for less expensive things, so that impacts, you know, all the restaurants everybody's been going to and everything else, and that's just a cascading impact as purchases decline. So I don't know, we'll see what happens, but I'd like a nice little surge. I'd love a little bounce here would be nice, but we'll see what happens.
Yeah, I don't know. I sort of feel a lot like almost like this is last year, same time, everything. Like I still feel like there's something coming.
Yeah.
But you know, that's how we were looking at it last year.
Yeah, look where we were in June of last year.
Yeah,
July.
I mean, where we are now, or a little bit higher.
Exactly.
So, you know, but I didn't really feel like last year I felt it turning. And you got to remember, we even talked about all those candles going up in July, August. But I don't see it. I don't see an event out there that creates the positivity, I guess.
Not at the moment.
What I'm looking at.
Yeah,
so,
I don't see people getting excited.
But looks again, most of this is equities driven. You know, so again, this is a time when you start, you know, you accumulate what you like.
Exactly.
And wait for opportunity.
Looks like the CFTC chairman has decided to start a little pissing match with Gensler over at the SEC. He's basically asserting that Bitcoin and Ethereum are commodities, which, you know, they've made that argument. If I'm not mistaken, this guy is actually known as being pretty crypto positive, and I even think did he work in the crypto industry for a while?
I think so. I don't remember where, but yeah, no, he is positive, and I love his logic when he says it was about Ethereum. I think when they were like, "Is Ethereum a commodity or a security?" And he says, "Well, it's clearly a commodity, or it wouldn't be listed here." I was like, I like the logic, you know.
You gotta love that shit.
Yeah. So yeah, he is coming after. I mean, there is jurisdictional, bureaucratic grab going on here.
Absolutely,
he's trying to take it all, and everybody else is like, no.
Well, and right now, Gensler has his hands full. Right, he's trying to get more money out of Congress. All of his enforcement mechanisms just got ruled unconstitutional. Yeah. And he wants to hire people because he's fired so many top people at the SEC. So, you know, I think what's his name? Benham sees an opportunity and says, well, while he's against the ropes, let me go and establish and try to take control of some things. So it's going to be interesting. I don't know how these things actually get flushed out. I don't know how it works between like different regulatory bodies. Does Congress have to dictate it to them, or do they like negotiate? Like you get this and we get that. I mean, I don't have a clue how that
it's
works.
Probably more like that, more like a sit down. Yeah. All right, Tony, you take these boys over here, and Jimmy, you're over here. You know, to me, it's. You know, it's done statutorily, but they're really all fighting for budget size. I mean, that's what it is. It's bureaucratic politics. I do like the fact, though, that, you know, to me, what I find interesting is how they're going to, you know, stable coins and where they fit in. You know, if ETH is a currency or a commodity, then, you know, why isn't USDT, let's say?
Right.
And so to me, I kind of think that's where I find interesting, you know, how that's going to shake out between, you know, Treasury, SEC, and CFTC. You know, who's going to be impacted. I think it kind of will get it to a point where, you know, there will be I mean, I think my mind is that there can be currencies and commodities, let's say, that also have a securities offering component to them, but yet there's not a security in that sense, but they have to play by the rules of, say, a security raise. I mean, I could see something like that, but, you know, I think that to me, CFTC is a better handler of it to me than SEC.
Right.
Just
Well,
my opinion, though.
yeah, it's going to be very interesting to see how this hashes out. But the more they're fighting, the less attention they can pay to other things. So
Yeah, and also the more they're fighting, the more we get to,
clarity.
yeah, exactly.
Yeah.
I mean, as they're litigating this out, that doesn't mean in a courtroom. It just means, them all arguing with each other and sorting it out and horse trading it. I mean, that does give more clarity. I mean, I
Yeah.
kind of think it has to kind of go that way where everything could be, commodity or currency, but, you could have security raises within
Yeah.
that and somehow that way. So you always have the edge that, can be doing whatever they want from, other locations, but the institutional grade stuff's just going to have to, the regulators got to step up their game to make it more institutional.
Yeah. Well, and it's interesting because last week, I think on Friday when you weren't on, I talked about, the SEC's not only on the ropes because their enforcement mechanism is now being ruled unconstitutional, but they seem to be on the ropes with this Ethereum, this XRP case.
Yeah.
And their I posted up a piece. I don't know if you were on with me or not when I did it, that they're even refusing to acknowledge that a video of the former chairman saying Ethereum is not a security. They're refusing to acknowledge whether it was him or not. Like they're violating the judge's orders for them to have met a date to say this is or is not the chairman, the former chairman on a video. And it's like, I mean, if they're at that point, it makes me really wonder if they're going to come out of this thing. I mean, there's supposedly going to be some settlement discussions between XRP and the SEC, but I don't know. I got to believe if XRP feels like there's daylight here, they may say, nah, let's take this all the way, and that will have ramifications. I mean, because then you have parameters, right? You have operating parameters for what decentralization actually means, what if you can emulate XRP and Ethereum at that point, and the SEC has to agree that they aren't securities, then at least you've got a roadmap if you're launching a project to decentralization and to qualifying under that definition, right? And it's much more difficult because if you're starting something new, you have to get there, but it certainly gives more parameters than we have now.
Yeah, I mean, I think that both of those fit what we were just kind of thinking about is that, they, and I think this is actually the Ethereum settlement language too, was that, that they're not a security, but they may have engaged in securities offering by accident. So it's like, so you could see that there's ways where you could have regulation of something on which the SEC's job, but then, maybe in that type of, is it a securities offering or not type of thing.
Right.
But then in, I guess market manipulation and things like that, that's the CFTC job, in the sense of it's commodity or it's a currency or it's whatever. And
right.
Sure, fair markets. I mean, it seems to me that's where it has to get. And so if XRP case gets to that level of precedent setting, then I think that's a good thing.
Yeah, I too agree.
As to whether or not it's Hinman in the video or not, I saw a little just blurb on that somewhere, and I thought it was how it was characterized. I wasn't sure what was what, to be honest, because I could see them sitting there going, "We're not video experts. We don't know if this is a deep fake. We don't know if that that kind of looks like him, but is it him? I don't know."
Yeah, I mean, they had the professor that interviewed him, like at some prestigious university, say, "This is him. I recorded this video. I posted this video on YouTube." So it's not like,
I mean, it's clearly him.
Of course, it's him.
But I think that he has to come out now and he has to say it's me.
Right. Yeah, maybe so.
Maybe the institution, for whatever reason. I mean, I think everybody knows it's him, and everybody's he's at an after event network party. I'm not saying I don't know if he drinks or doesn't, but everybody lets their guard down when you're doing the mixer stuff afterwards, and maybe that's something he should have just kept to himself at that point, I guess.
Yeah, this is 2-bit idiot Ryan Selkis, who I really enjoyed watching him on a panel the other day. There was supposed to be a panel at Permissionless on Web 3.0 and decentralization, and the entire panel was just, it was the only panel I went to where I was like, oh my God, this is a waste of my life. But
who was on it?
Ryan Selkis and some other project leads and 2 institutional guys, but it just wasn't what it was supposed to be about, right? But anyway, at some point, one of the other panelists started talking about, how the future of DeFi is helping poor people and people in third world countries, and which, it's great, but it still had nothing to do with decentralization. And Ryan said something like, oh my God, as soon as we start talking about the fucking starving children, we've gone off the rails of what this topic was supposed to be about. And I busted out laughing out loud. It was funny. Anyway, he said, he posted this. He's relentless on Gensler, man. He is like, it's a good thing his company doesn't have a token, because I guarantee you he'd be at the top of the hit list.
Oh, yeah.
Because he wrote, Gensler hears from bankers. Gensler said his concerns became more acute over the last year after several bank executives shared their concerns with me about the sheer number of depositors who have moved money from their bank accounts into crypto-related exchanges and wallets. Then he wrote, Goldman Gary is not a mean tweet moniker. He is part of the Wall Street elite that despises the plebes he came to protect. What's alarming is that the conflict in Wall Street bias has been made explicit. He remains crypto's public enemy number one. I mean, he constantly is on him. But I found this whole quote interesting. Like, you're going to testify that several bank executives are concerned that people are moving their money out of their bank accounts into crypto. It's like, well, yeah, that's how it works, dude. We take our money and we do what we want with it. So,
yeah,
anyway.
I mean, somebody looks at a financial statement, it says, oh shit, our deposits are down. Where are they going? Oh, Coinbase. Oh, fuck. I mean, I'm sure it's like 0.25% or
of course
0.1 of 1. It's like nothing. But yet, so of course, anybody, it could be the same thing. Oh, we saw a bunch of red envelope day in China, and all of a sudden our TVL was down.
Exactly.
It's going to be back next week, dude.
Yeah,
it's
exactly.
Like there's always somebody stating the obvious.
Yep.
So,
yep. So Fantom, thank God, is up 15 to 20%. Yeah. But the speculation is, and this is just, if you're out there buying Fantom, the speculation is Andre did some movements of some tokens over the weekend, and somebody had tweeted about the fact that he had moved these tokens around and sold some stuff or whatever, paid off a loan. I don't know. So it was like $20 million. And Andre Cronje. And the speculation on the headline that I read was that the reason Fantom is up because people think Andre's coming back into DeFi. And I'm like, if you're buying something because you think Andre Cronje is coming back into it, I'm sorry, you're betting on the wrong friggin' horse. I love Fantom, don't get me wrong, and I spend a disproportionate amount of my investing in time on the Fantom chain, and I love the team and I love what they're doing, and they have a ton of money and runway. But do not, from my own personal perspective, this is not financial advice, but I will never make an investment based on Andre Cronje being involved in something again, because I can't trust him not to throw a hissy fit and bail on it again and screw up the entire ecosystem.
Well, so, look, if he would get off his ass and pull Do Kwon into this, and who's our other buddy, Daniel Sesta, now there's a real fucking winning team, those three guys. Yeah, look, you just put up the show wallet address, man. If you're
the quitter, the arrogant, and the cult leader. It's like, give me a break.
If you want to throw your money away, then put up the show wallet address, Brad. You can just send it here instead.
Look, I want to see more people into Fantom. I want to see more investment there. And look, the liquidity has been drying up, and it makes me nervous. And I think it's undervalued and has huge potential. But I'm not betting on Andre Cronje for shit.
Those
like,
guys already had their go around.
no, man, you had your chance. You knew. Look, how many times are you going to whine and cry about how mean people are in DeFi? Stay out. And then to have the nerve to say, hey, look, we need to start bringing in as much regulation as possible. It's like, dude, what?
What are you now? Is that your deal that you're cutting? Your non-prosecutorial deal? Okay, I'm going to go out in advance and just show you how much I'm going to start trashing all those assholes in DeFi.
Exactly.
Wallet,
like,
all of
look,
$5 billion in it. What are you talking about?
There's a lot of great projects in Fantom. Put your money in there because
Yeah.
of that. Don't put your money in there because Andre Cronje might come back. That's the worst thing that could happen. Stay away.
No, there's a lot of good stuff on Fantom. I mean, I still active in Geist. I mean, Fantom, I bought some of that. I bought some Geist just because why not?
Yep.
You know, the price is right. And, you know, Avalanche, you know, I don't really see a lot going on there.
They're focused. I have an article coming up. They're focused really heavily on the subnet stuff. They see that as a differentiator for them. And I actually think that's a pretty smart strategy. I had some, I can't reveal it yet. But had some conversations with a project that is doing some really cool shit with subnets on multiple chains and
Beanstalk. Beanstalk.
No. And coming soon. And I think we're gonna see more of that. I think we're gonna see, especially, I mean, we're seeing a lot of it in games. I kept hearing that last week at Permissionless, how many games are starting to look at subnets on Avalanche. And Binance recently launched subnets for Binance Smart Chain. So the idea is you can have your own chain utilizing the power and capabilities of the parent chain, and you can set up your fees the way you want it, set up the staking and the nodes the way you want it. Have much faster processing, and that's important for things like games, right? So
they're like hosting. They're hosting. It sounds like.
Yeah. I mean, they're creating their own blockchain, but it's a subchain to the main chain. So subnets on Avalanche get all the capabilities and power of Avalanche, but they have complete control over what the token is that pays for gas, how much tokens are. They get a lot faster transaction speeds because the other network doesn't slow them down ever if there's like 1 million NFTs being minted or something. So it gives a lot of power to projects that are building out functionality where they really want to have high-speed transactions, have their own token for gas, etc. So I think there's going to be more of that. I think it's going to start pretty heavily in the gaming space, but I think it'll grow beyond the gaming space. So, things that need to write data to chain that want it encrypted and private, supply chain stuff subnets make a lot of sense for that. So I think it's a smart move by Avalanche to do that, but you're right. I haven't seen a lot of other projects really going crazy over there. Trader Joe has been making a lot of waves and doing some really cool shit. I'm really impressed with the team there. But look, I like Fantom. I like what it is. I like what it does. I even like the fact, Andre designed the consensus for Fantom, which is great. But now there's, 100 plus people that are managing it and they don't need them. So,
yeah, I'm just trying to think. I guess my comparison is that, I mean, if you're going to go beyond Ethereum, let's say,
right,
then to me, when I look at everything else that's there, including Solana and including Avalanche and every other layer 2 on Ethereum, the only ones I really, really like are Polygon and Fantom.
Yeah. I like Polygon.
I mean, they're both at the right price point. They're in the crazy world of crypto market caps, they're, realistic, quote unquote. And looks like they have room to grow, but they're also doing things.
Yep.
And I think that subnet concept for Avalanche is actually really cool. Kind of turnkey, boom, here's your chain, here's your token, here's your revenue.
Yep.
That can definitely go somewhere.
Yeah,
but
I agree.
But I think everybody else is going to pick it up.
I do too. I think Polygon will have it. I think, somebody will do something with Fantom if it's possible. Yep. I don't know the technical ramifications of the existing chains and what's possible and not possible. But like I said, Binance is doing it. And I think that's an opportunity on the Binance Smart Chain side, or what's it, Binance Chain now? for them, like if I'm thinking, so here's how I'm thinking about it. If I'm a game developer, and I want to attract retail users that are already comfortable with crypto, then, the largest retail base is on Binance. And so that's something I would seriously think about if I was a game developer coming into the space, because you get this built-in massive audience, despite its kind of reputational issues in terms of the scams and stuff. It's got a huge number of traders. You also have the gateway in the Binance Smart Chain wallet directly into Binance.com. So that actually makes it really simple for people to move straight onto chain and give you opportunities. So anyway, we'll see what happens with all this, but it's interesting.
Yeah, look, to me, I know we've always historically picked on Binance, and Binance Smart Chain and all the exploits there or hustles. But man, hasn't it just extended everywhere now?
Yeah,
I mean, it just seems like it's like, I don't even know. When you said that, I was like, yeah, I remember when that was like the only place these rug pulls and shit was happening on.
Right.
And now, you see it happening all over the place. So
exactly,
we got to start looking at that a little bit more.
Yeah, I haven't really looked. I'm constantly getting people on Twitter pitching me shit, to look at for the show. And I had an interesting one come in, and I started to read the white paper. I just haven't had time, but one that does under collateralized loans.
Yeah, I like that.
And it's a mechanism. It's not an under collateralized loan, I think, at my initial few paragraphs of reading. It's not an under collateralized loan that you can just take the funds and go, right? But you can borrow up to 3x your collateral. And the idea behind it is that you're wanting to get some other tokens you want to invest in. You just don't want to let go of your BNB or your BTC or whatever it is, right? So I'm going to look at that a little more closely, and I talk to the guy, see if it's worth. Maybe we'll get him on the show.
It's not Acropolis by any chance, is it?
No, it's called. Hold on, let me pull it up.
Because I still have some of them.
It's called Hashstack. It's Hashstack.finance.
All right. Yeah, because I remember looking at Hashstack.
HASHSTACK.finance. I think they could do a little better job explaining how it works on their website, but
I like it though. This is when Acropolis came to my attention over a year ago with their under collateralized loan concept. I mean, to me, I was always like, okay, to me, that means, you're borrowing multiples of what you've deposited. You're not borrowing 75% of what you deposit. And this looks to be kind of interesting, 300% of your collateral.
Yeah.
So this would be highly leveraged stuff that you could get wiped out in a second. But if you got something that makes sense and you pay attention to it.
And if you're providing deposits, they're paying really nice APYs up to 24% on deposits. So if you think about it, that's also an opportunity. I don't think it's launched yet. It shows testnet here. I think they're only on testnet. But anyway, take a deeper dive. Maybe we get them on the show.
Well, when you think about the 9-9 strategy, to me, this is what's always interesting is that now if all of a sudden, you're basically posting, let's say just do $10,000. Okay. And then you're borrowing 30,000. And then if you go, whatever that token is, if you go then buy a bunch of that token with that 30,000 they gave you, and you do the same thing and you keep doing it. I mean, to me, you're set up for a monster win.
Yeah.
Or a complete loss.
Or a total loss. Yeah. But what are I don't know what the liquidation parameters are.
Yeah.
So who knows what the percentages on the liquidation are. Have to climb into that further, but you're right. It could be a massive win.
You have to KYC your kids into the process. So they're going for kidneys and livers and things like that as collateral.
That's it. Anyway, I'm going to take a closer look at that one. I thought it was interesting.
I like it.
Yeah.
I like it.
What else we got? Oh, Panama's president isn't ready to sign in to law their crypto bill yet. He's concerned about anti-money laundering activities and wants to make sure that it's on the up and up. So
I like how he calls it anti money laundering activities.
I think he's posturing to try to position Panama as responsible, given their history. So
yeah, I was going to say they're pretty much on the. I mean, I guess money laundering is it means different things in different jurisdictions. and let's say, I mean, I'm speaking from a U.S. perspective here.
In some places, it's just business as usual.
Exactly. And I was going to say, it's funny to me, tongue in cheek, that Panama is pursuing the anti-money laundering laws because it would directly impact their business. Right? So, until they could get on top of this whole, hey, this new crypto thing could make us make more money, right?
Yep.
But
so he's holding off a little bit just to see. I guess he probably wants them to strengthen up, AML, KYC shit. Who knows?
He's just working for their big, basically.
So this was fascinating to me. Vitalik and some other folks co-authored a new paper, and this is a great little summary. I'll put it in the show notes. But the gist of this thing, or one of the primary components of this paper, is something new that they're calling Soulbound tokens. Tokens. And they are NFTs that cannot be transferred after they're received, right? So they can become an identity mechanism. And here's some of the use case examples he gets. He said that Vitalik said, or Glen Weyl said that they'll be available for early uses by the end of 2022. But I could see some businesses around this helping projects use that. So universities giving soulbound tokens as degrees, right? You could never transfer it to somebody else. You couldn't sell it, but you'd have a digital representation of your accomplishment. A company trying to hire people who went to a specific conference, or have a specific certification. So if I attended permissionless last week, I get an SBT token. And maybe one of the things that can be done is looking at instead of a resume perspective, you've got certifications, your degrees, other trainings, and other things you've been involved with, proof of having worked in a given business or industry. And you've got all of these, and companies could then potentially, like, you could be anonymized, right? And there'd be a search mechanism built. You decide to join this directory. And now if you're looking to hire somebody with a specific set of skills or accomplishments or projects you've worked on, whatever, they can go through and find all of the people that hold the combination of tokens they want and then reach out to them, right? So anyway, it sounds fascinating. Chuck said, Soulbound means that you can never change wallets. This is not going to work in the mainstream where people lose wallets, retire wallets, etc. Niblet says, stop, you're giving away one of my business ideas. Chuck, that's actually a good point, but I gotta believe. I'm sure we have to look at the paper. It's 37 pages long, but I have a feeling that's something they thought about. But who knows? Maybe maybe there is no way, and you have to maintain that wallet, and that's what it is, right? I'm sure there'll be some kind of storage mechanisms that people can have for it. But you're right, that would be a problem if that's the case. I totally agree with you on that. Use case 3, a DAO wants to build a community of environmentalists. The DAO can airdrop SBTs to attendees of environmental conferences and graduates of environmental programs. Vitalik calls this a soul drop instead of an airdrop. They call it a decentralized society and believe it's the future of Web3. Conceptually, I think this has a ton of potential and could be really cool. So,
yeah, I mean, also, I think I saw something on this too. Remember, I don't know if you ever saw that short video called Slaughter Bots, which is about those, they're sort of little mini drones that hunt down all these people with facial recognition.
I remember. I think you're the one that showed me that video.
Yeah. So what if you dropped, NFTs in this permanent wallet, and then, later on you're running big data analytics on them, and you're like, 60% of the people that have this NFT did this or that, all of a sudden you could start compartmenting people by that wallet. And use it as a way to sort of predict behavior.
Yeah, that's true.
Pretty scary stuff.
I thought you were going to say it'd be a way to get you shot with those little things.
Well, I think they're coming in and they're going for headshots with those little slaughter bots, you know, little C4 charge or something. That's a scary. Nuts. If anybody hasn't seen that, what's that called? Slaughter bot, BOTS, I think.
Yeah.
But it's a political, you know, they're going after some political dissidents.
Yeah.
So when you were saying it, I was thinking that could be an interesting way to run like Telegram channels, you know, where you have
for your membership. Yeah.
Yeah. And you have to have different things there. But again, these permanent record things can come back to bite you.
Sure.
If it's in the wrong hands.
So there was this great thread. Do you remember Richard Hart? I don't know if you and I have ever talked about Richard Hart or not.
Heart to Heart?
No. So Richard Hart was a YouTube guy. I guess he's still on YouTube. I don't know. And he, you know, he launched project after project after project that basically made him wealthy over time. So he's launched. I had no idea. I knew he was launching a chain. I'd seen tweets every now and then from people talking about what a con he is or whatever. And I don't have any proof that he's a con, but this is pretty priceless. So the chain is called Pulsechain, right? And here's, I can't even, it's just so hard for me to imagine that anybody thought this was a good idea. So it's raised $1 billion. Really? $1 billion from retail. The idea is they are forking or have forked Ethereum. And the premise of him saying why this will be so valuable is that they are forking every project that was in Ethereum. So Chainlink, every token, every smart contract, etc. Right? Like they're forking the whole damn thing. And the idea that he pitches to people is that this will create all this value on the other chain. But people are bringing up like, wait a minute, dude, how are you going to get liquidity? How are you going to have this fork of Uniswap actually function, right? How is Chainlink going to function? How are you going to maintain the oracles on Pulsechain with nobody actually maintaining them on Pulsechain, but still claim you have an oracle system like a copy of Chainlink called Pulsechain? And it's like this total mess. And then she brings up a really great point that EVM bots are going to have a friggin' field day with no liquidity on this chain, because as of all these people that gave him $1 billion are trying to use the chain and trade on the chain, and there's no real stable liquidity or anything, that EVM bots are just going to wipe everybody out. Like, just what did she call it? She called it a MEV supernova. But it's like, oh my God, the AMMs will be out of whack. The liquidity will be out of whack.
So wait, what is this one called? Just so I make sure I stay away.
Pulsechain. Joe's jumping in to buy some Pulse.
Yeah, let's go ape in, boys and girls.
Yeah. Anyway,
I'll take some of my own winnings and go on into Pulsechain next.
It's pitiful. It's pitiful. And by the way, Richard Hart has 90% of the token PLS.
Really? God, that doesn't sound like a pump and dump.
He had another coin called Hex. So
he was Hex.
Yeah, this is the recovery into Hex.
Oh, everybody last year or whatever going, oh, Hex is the next greatest thing. And I'm like, bullshit. And I'm always waiting to see what happened to Hex.
Well, that's him, Richard Hart.
Okay, good. So he's
everybody got fucked.
Yeah, so I'm sure this $1 billion is probably all Hex. And it came out of his 90% holdings of Hex. Yeah, we've raised $1 billion.
Oh, evidently she was involved in Hex in some way. Anyway, you know, I would recommend staying away.
Yeah.
So everybody wants a wallet. Ever since everybody found out that MetaMask is clearing like $300 million a year, everybody's got a wallet, and now GameStop's got a wallet. So wow. I don't know. Look, I love that GameStop is moving into crypto, took advantage of all that stuff that happened with them last year, and you know, took the money and invested and is coming into crypto. I just, you know, maintaining a wallet from a security perspective, a support perspective, everything else is really difficult. I don't know if they're partnering with somebody to white label somebody else's wallet so they don't have to maintain it. But
gee, if we only knew somebody with a wallet that could white label it to them. Gee, who do we know that has one of those?
Yeah, exactly. So I think there are things that they could get into. I think there are things they could get into in crypto that don't require all that they're trying to do here. And I think to me, it's kind of a foolish thing. And I wouldn't put my money into a GameStop wallet, but they're launching an NFT marketplace. So maybe it'll be successful. I don't know. Coinbase has a new one. By the way, were you and I together when I talked last week about Coinbase now has DApp access in the Coinbase application, not the Coinbase wallet. So the actual application itself. And I've got another thread coming up here that talks about how much work Coinbase is actually doing at a protocol level. So I will say this, I've been critical of Coinbase and called them an on and off ramp only, and that's the only thing they have in their business. It's interesting to see them taking a deeper dive into dApps and protocols. And what's going to be really interesting is what's your revenue model, right? Are you going to do swaps back to the centralized exchange? Are you going to do swaps like MetaMask does using 0x? It's interesting, but I have to applaud the fact that they're actually diving deeper into protocols and working and trying to be part of the dApp ecosystem, because I really didn't think that they would go there with their regulatory stance, right? I mean, I think they're risking their main business with their regulatory stance, but who knows?
Yeah, but isn't the GameStop play to close all those stores?
Yeah, I'm talking about Coinbase now.
Okay. All right. So, but what is, I guess you're thinking about wallets and custody issues and things like that. So are you saying more that you question GameStop's move in this space, or
no? Well, I think it's silly for GameStop to move into wallets.
Yeah.
I just don't think it makes sense, but maybe they have a bigger plan. Maybe they're going to do some gaming link to it or something. I don't know. And more power to them. But I just think maintaining something like that, supporting something like that, especially if most of their customers are non-DeFi natives. But my point on Coinbase is I have been critical of them for the rate, what the fees they charge on their exchange, which are still shitty, and the fact that they're basically an on-ramp. And I questioned buying their stock because I don't think they're probably going to ever be much more than that. But what they've been doing over the last couple of months is diving deep into integrating dApps into their app and into their wallet, which I love seeing. I'm glad they're doing it and they can onboard a lot of people. Here's the question I have though. They bailed. My thing with Coinbase's stock has always been, that's all they were. All they were was going to be an on-ramp charging large fees to newbies until they figure it out. And Coinbase backed down from the lending platform they were going to launch because the SEC said, no fucking way, we're coming after you if you launch this. So my question is, from a regulatory perspective, how are they syncing this up that they're now offering dApp access in their apps? I would think their legal team would still be concerned about the exposure for the company, but maybe they figure, well, it's decentralized. We don't have any control over it. People can do whatever they want. I don't know.
I think if I was Coinbase, I would be looking at it as that they're going to fight me on anything I do, any which way I do it. So let's just go do what we're going to do and engage and pay the fines.
I hope they do, man. I'm all for it.
But yeah, I agree. It's when I look at Coinbase as an investment, that company, I start thinking, well, who is the competition to them for the U.S. market? And, I guess it's, FTX, Crypto.com, and Binance US.
Yeah.
And so of those, who's everybody is either in crypto already or hasn't. And so anybody that's not in the US is probably going to go to Coinbase.
Yeah.
Just because it's the only one they've heard of.
Yeah.
Maybe more Crypto.com and FTX the last, this year. But so I kind of look at it as never overestimate the stupidity of the American consumer, just in the sense that, and again, I'm not picking on any of us. Okay. So I can say it. I'm not being racist or anything against Americans, but, they take the easiest choice, the default choice. And, we always talk about how hard it is to set up, it's not, but the first time you do it, it's like RPC networks and wallets and
all the concepts are really difficult.
And then terrified you're going to fuck up and lose it all. in some stupid way where you just kind of
Exactly.
leave it hanging there and somebody takes it.
Yep.
I mean, I think Coinbase is the default choice. So in that regard, I think long term, I think it's probably a pretty good bet.
I think it's smart. I'm glad to see
Yeah.
him doing it, and I think it can only help the ecosystem. So
Yeah,
that's cool.
but you have to think of it. As soon as they get big enough, then somebody's going to snag them.
yeah,
I
most
mean, what
likely.
about if like Meta went for them or something like that?
No, that's interesting.
So
That's an interesting play.
I don't know. Everybody's really, I think, fighting over for that, the digital commerce plays to me, and how digital currency is used in those platforms. So like back to the real quick, the gaming one, GameStop. I mean, that was what that other company I was advising when they were trying to do the portable tokens across the gaming platforms.
Right.
This kind of makes it, if they do a wallet, it gets an interesting angle in there where, they're the ones laying the tokens out and managing the tokens for everyone. So that's kind of intriguing.
Yeah.
And shutting all the stores. But can they execute?
Yeah. Who knows?
I don't know.
It's hard.
And like you point out, they take on a lot of regulation at that point.
Yep.
From everyone, from New York state financial groups to federal. So
That's right.
But I guess if you got to pump it up, you got to pump it up.
So there's been this NFT project. I don't know if you call it Milady, Milady, whatever.
Milady.
That I have avoided being a part of, but all the big whales were in Milady. I'm going to go with Milady. All the big whales were in deep in Milady, and everybody had a Milady NFT as their PFP and blah blah blah. So I tweeted the other day that I just was resisting it, and I said I will not Google what the fuck is Milady. I will not Google what the fuck is Milady. Well, then on Friday or Thursday or over the weekend, the founders of the project were discovered to be less than savory characters, shall we say.
Really?
It turns out that one of the leads is also known as Maya, and has done some interesting writings in the past, which that person, male or female, is now claiming to be performance art. Why can't this?
Oh God, man! People just actually really write this shit still.
Yeah, if we introduce gorillas into society instead of keeping them locked to zoos, I'm sure they could integrate just as nicely as other oppressed minorities have. Their initial test performances might be lower, their average IQ, etc., but this can be explained by nutritional and social differences due to the history of zoological slavery. This propensity towards violent crime can be explained similarly. This one is all about women and being subservient to men, and women need to be treated as children.
Wow!
Be treated.
Good luck with that one.
This one is theories on why there are gay men and how gay men have a proclivity to abusing children. Yeah, tasty. And this one starts off with first you kill the Jews, so you can imagine where. That
lose everybody on that one.
Yeah. So all of this was discovered. It was also discovered in private discussions in their private Discord group that they were doing things like attacking and manipulating people that are anorexic girls on Twitter. And that evidently there is actually potentially a suicide of a 17-year-old tied to the abuse that these people did to people. So I'm going to put a link.
How did you find out about this?
This thread and another thread talking about what they were doing was retweeted by people that I have notifications on for, and then I was over with. I was done.
It's funny because I noticed that, having a 17-year-old daughter, it's sort of similar that, all of a sudden you get all these like references from stuff that 17-year-old girls look at, and you're just like, what the hell? Where did this come from? And then you're like, oh yeah, Sam was in here. Or whatever. So I was wondering if it came from something like that. That's what I was getting at.
Yeah. And so now the project's in a bit of crisis. They're losing their value. et cetera, et cetera. People are talking about forking the project and getting them out and blocking them. But I mean,
wow.
it's like a steady stream of really shit behavior.
They should team up with the ETH forking company.
Richard Hart.
I mean, it sounds like a match made in heaven, right?
Chuck says sounds like the project for neckbeards. Yes. But just some shitty stuff, and it's in the news, so we're covering it, but it's ugly. So
yeah.
Alchemix is revamping their tokenomics, and they're going with some VE stuff. I read through this briefly, but didn't dive completely into it yet. But I'm actually pretty excited. So they're doing bribes and et cetera. And I know how active Alchemix already is in the bribes community. They're involved in every bribing platform possible to get liquidity.
I'm sure that's just the type of quote the SEC loves to see, is things like that, I mean, I wish they would. The thing is, I get it, but I mean, I just wish they'd call it tips or something like that.
Something like incentives.
Yeah, because
something besides bribes, but
it's
bribes.
Not
it is.
Yeah, I mean, bribes implies something negative going on here.
Yeah,
and this is just more about incentivizing proper arbitrage opportunities to make the business model work.
Yeah. So they talk about there's going to be significantly boosted yields for holders. You're locking tokens up, so there is some risk there. But overall, I really love that they're taking a hard look at kind of the fundamentals of their protocol and working on making changes to it. So, talked to Scoopy a couple of times in the last couple of weeks, and I know they're working really hard at that team to just kind of build a foundation for the project. And I didn't know this was coming, and was excited to see it. So this came out last week. I'll also have a link to that in the show notes for people that want to take a deeper dive on one of my favorite projects.
Well, and there's a great example with that project. I mean, a lot of people still don't even know what it is.
Exactly.
And to me, self-paying back loans, how does everybody not know about this?
I'm flabbergasted by it.
It's just, I don't know what the thing is, but it would seem to me that this is something that everybody would be interested in.
Absolutely.
But, I guess, maybe it just needs some kind of, user-friendly stuff or something like that.
There you go. And a boost into the real world would be nice.
Yeah.
Absolutely.
Could you imagine if some bankers that say, I don't know, how much TVL do these guys have now? Alchemix, like 70 million or something?
Probably.
It was high, but I know that it kind of went down when everything else went down.
Yeah.
If you're like running a small alpha pool or whatever with, a couple 100 million in it, and all of a sudden you could slide in here for like 4 hours and boost yield. I mean, I would be, because the risk, if you're an institutional guy, is just, hey, what happens to my deposit? That's all they're thinking about.
Of course.
And if you do small amounts and kind of prove that it works, then all of a sudden you're playing with house money. Then it doesn't really matter. But I just can't see why more people aren't on this.
Yeah, I don't get it either.
The token price is great too. I think I saw maybe the weekend kind of went by in a big blur, but I think I saw last week it was like 30 or 33 or something. Yeah,
absolutely. At one point it was at 1,500.
Yeah. I remember like buying this at like 6 and selling it at 11. And maybe an 8 and 10 or something, but this
$34 right now.
Yeah.
Up 5% today. So that's good.
So, the price is right for partnerships for them.
Yeah.
So again, I think that this is really excited to see how this affects. Did you read the whole article in depth? Or?
Like I said, I breezed through it. Okay. But I haven't taken the time to go full in on it, but it's essentially, a liquidity model for incentivizing people to provide more liquidity, for the project to own its liquidity, to be in control of it. I'm sure they'll still be heavily active in Curve and Convex and all of that out there in the world. And I know they're involved in Spirit. They're doing bribes and liquidity on Spirit Swap. They're doing stuff on Beethoven.
Explain that to real quickly, the bribes and liquidity, just so that everybody gets what that means.
Well, I'm not the guy to give an expert explanation, but I'll just tell you quickly. What it basically means is that people that are staking in protocols can decide and vote with governance tokens on those protocols where the liquidity goes, right? And so projects come in and say, I'll give you X, for every person that decides to vote for our liquidity. And so it's on the chain. You can see who voted what, who did what. And then the more liquidity gets distributed proportionally based on, who got the votes. That's basically the idea. And all of these projects desperately want to maintain as much liquidity as possible, obviously. The system just kind of keeps feeding itself. But that's the basic gist of it. Niblet said, Joe, when is Joe publishing his self-paying loan strategy guides? Shut up and take my money. I already did a free use case on Twitter. You can pick any one of those and go for it, man. Start your own venture capital firm with everybody having risk-free capital in. There you go. There's one.
Yeah. I mean, there's tons of great ideas. I mean, the key differentiator here is free money.
Yep.
I mean, doesn't get any simpler than that.
Like, look, what I don't understand is, like, if I'm, especially as things get tighter here in the coming months, it's like, it is a beautiful thing for hedge funds, venture capital funds, charities. It's like people that are going to be hesitating in a down economy to invest in things. If you can go to them and say, look, give me 10 million and you'll have, or put 10 million in Alchemix, you'll have 5 million invested and you're going to get your 10 million back in 5 or 7 years or whatever it is. Right. That to me is kind of a motivator during a recession that can keep money in the game. Right. Because people will be like, well, okay, fuck it. I'd love to get the returns on Mr. VC's fund or help this charity, but I really am scared of parting with my cash. But if I know I'm going to get it all back in 7 years and I could make money on this, all right, I'm in. So anyway.
Yeah, no, I mean, it's a no brainer on just locking in a 50% hedge.
Yeah.
I mean, if you think of the scenarios where, like, say you wouldn't get it back in 5 to 7 years, I mean, that's total cataclysmic shutdown.
Yeah, no, everything's dead.
It doesn't matter at that point.
Yeah, it doesn't matter. This is a tweet from Jesse Pollack, who's working with Coinbase on their protocol integrations. And here's the 4 things they're doing in general: integrating protocols into their products, building protocols, and supporting innovation. I'm assuming supporting means funding protocols in the broader ecosystem, and investing in protocol talent and core tech. It really sounds to me like, and this is a good thread for everybody to read, it really sounds to me like Coinbase is diving deep into dApps and decentralization. I think it's a brilliant move. I think it's really smart. So we've already kind of talked about it, but this was the thread that I was talking about from it. There's also an article about it. Huobi did an analysis piece on how much growth there is in decentralized storage in platforms like Filecoin, IPFX, and all of those. I have not read this piece yet, but it basically says that they expect this to continue to grow dramatically. And so that's an interesting space to be in, and not a space I've done anything. I've played with IPFX. I've played with Arweave. I haven't ever played with Filecoin at all. But that's some really interesting things. And I've not used any of them except for IPFX as storage. But I think there's some opportunities here potentially from an investment perspective to start thinking about, because, storage is a growth market. It's only going to get bigger. Any integrations they do will grow the values of these particular projects. So definitely something for folks to be taking a look at.
Yeah, and also with storage, you don't want to have these big juicy friggin' targets for people to go after the data.
Exactly.
Decentralized and fragmented and parsed and packetized and sub-packetized out there everywhere, so nobody can put it all together.
Exactly.
I think what's interesting is how this fits in with, overall, say digital markets or cryptography, or just how, there is such a need for everything to be decentralized. And we always talk about it. After a while, you say it a million times and it kind of loses its meaning in your head, as to what does it truly mean. But when you think about this application, think about like cybersecurity, going concern infrastructure, all of it. There's so many other applications that tie around decentralization that we don't always appreciate.
Correct.
And, if you look at like what you said earlier, NFTs for identity, we think about authorized users and passwords and all these other things that we're trying to put in this, Web3 or, whatever we're calling it, these days. This is the key thing that kind of holds it all together. How do you sort of mix it up in the blender so nobody can see what it is, and then pull it all together that moment you need that data or that application for something. So, you think about that and you think about what we're doing now. I mean, we're not even at the friggin' beginning, basically.
Not even close. Yeah, you're right.
So when we get these contractions and setbacks in different markets, it's just the way the markets work.
That's right.
Now we got to figure out what happens next.
Yeah, I agree, man. And like I said last week, at Permissionless, I got 0 sense of malaise, 0 sense of depression. People were excited. People were building. People were investing. People were funding shit. I mean, and there was a shit ton of institutional folks. It was like, to me, there was no clue that we'd had this massive dump the week before. Like, you would have never known that it happened, except for the jokes being made about Do Kwon.
That's where I was going right next, man. Yeah, I figured you were hanging out with all the K-pop stars, and every
panel had some shitty comment about Do, which was a lot of fun. I enjoyed it.
Did he show up?
Oh, please. Oh, you know what's hilarious? Right. They had 2 parties that they had sponsored, and at one of them there was a big giant sign out front, and they had switched the sponsorship to Avalanche from Terra, and they had a big sticker over Terra with the Avalanche logo, and somebody went up and was like, yeah, and peeled it off, and there was the Terra logo.
Yeah, God, man.
Galaxy spoke. I told you that Novo has ghosted me. He and his team agreed to an interview, blah blah blah, and then vanished off the face of the earth, right? And they were sponsoring a party there. So I was hanging out at the bar waiting for Novo, man. I was like, I'm going to corner this guy. He didn't show. He was in Europe. Yeah, he was out. A16Z has launched a $600 million gaming fund. It is not just GameFi. It is gaming in general. But based on their slant to DeFi, I'm got to believe a lot of that $600 million is going to go into GameFi. So if you're a game builder or want to build games, $600 million sitting there. So, getting an appointment with these guys is difficult. You got to know somebody who knows somebody, but that's a really good sign. A16Z, Andreessen Horowitz. So that's it. Subnets we already talked about. That's all I got for today, Joe. And it's already 1:03. So
yeah, good tempo today.
And I'm fasting. I'm starving. I could eat the ass end out of a skunk right now. So
that sounds appealing. I was going to ask you, when you announced your weight on the air the other day, I was like, I was kind of shocked. I thought you were probably 20 pounds lighter than that.
Well, I'm not yet.
Yeah. So I was going to say, what happened to the fasting, dude?
Dude, I'm fasting, counting calories. I'm burning with exercise 300 to 400 a day. So I'm on track, man. Killing it.
Did you color your hair recently? Because I noticed that gray thing's gone from the front.
I don't color my hair ever.
Okay. All right.
Never have and never will.
There you go. All right, buddy.
So don't you worry about that.
I won't.
No, I'm not as vain as you, Joe.
Yeah, I just cut the gray out, man. Kill shorts.
Thank you, everybody, for listening. We love you. We appreciate you. Please rate and review us on Apple Podcasts, or subscribe and click the little bell on YouTube so you don't miss out on any of the exciting and intriguing insights of Joe and Brad. We appreciate you being here. Let your friends and family know about us. Please retweet, follow us on Twitter. If you have some ideas for a show, you can reach out just like the guys at Hashtacks did. DM me on Twitter, B05Crypto, Telegram, B05Crypto, Discord, B05Crypto, #2143, and Brad Nickel on LinkedIn, but I don't check LinkedIn very often, so not the best place to reach out to me. That's it, man. Have a great day. I hope everyone has a wonderful afternoon. Joe?
Yeah, likewise. More abbreviated version. Thanks, everyone.
There you go.
We'll see you tomorrow.